Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, folks, we do want to get to one of the stocks that are definitely on our radar. I should point out, too, we mentioned the markets. Charlie just giving a rundown. I'm looking at our Markets Live blog, and we do say that U.S. equity futures under pressure, equities, I should say, under pressure, too, that there's a report of a new coronavirus. Tim, this is something that we were in the newsroom and you mentioned coming out of China. There's just, I think, a South China Morning Post. That was one report. There was another one.
Yeah, the Daily Mail picked it up midday today, Wall Street time. The South China Morning Post reported late Thursday that a research team in China had found a new bat coronavirus that they say could risk animal to human transmission. We actually see shares of COVID-19 vaccine makers spiking today. Moderna's higher, BioNTech ADRs were higher, Pfizer higher, Novavax higher as well.
So our live blog that follows the markets just saying that is certainly souring risk sentiment further on this Friday, and we continue to trade near our low. So we're going to keep a watch on that. And we're going to roll it into our next conversation. We mentioned one of the stocks on our radar, UnitedHealth, dropping today, the most in about 5 years, down roughly 7% right now. The U.S. Department of Justice has been investigating UnitedHealth Group's Medicare billing practices, according to a person familiar with the matter. So we wanted to get to what we really know on this story that was first reported out in the Wall Street Journal about a civil fraud investigation into the company. So with us to do that is Bloomberg News healthcare reporter John Tozzi joining us here in New York City. John, what do we know, and have we actually confirmed that there is an investigation going on at the Department of Justice?
We've confirmed that there is an investigation. This news broke in the Wall Street Journal this morning, saying that there's a new civil fraud investigation into the company's Medicare billing practices. We should say this is an issue that's been under scrutiny for a long time at a number of insurers. So I think we're trying to figure out exactly kind of what, the details of this investigation and what it entails when it started. The company has said in a statement that they're not aware of the launch of any new activity reported by the journal, but they haven't denied the existence of an investigation. So we're still looking for more details.
Well, as you mentioned, the journal reporting the civil fraud investigation into whether the company's practices related to patient diagnoses force higher payments from the government's Medicare Advantage program. What does that exactly mean, John? What part of the business is that, and what would that mean?
So one of the biggest businesses at UnitedHealth and several other big publicly traded insurers is selling private Medicare health plans. So these are plans that seniors can enroll in and get their Medicare benefits through these companies. The way it works is the companies basically get a premium payment from the government for each member that they enroll. And that payment is adjusted based on the expected costs of those members. So, for sicker members who have lots of illnesses and lots of medical needs, they get a higher payment. This system has been under scrutiny because of the ways that it can be potentially manipulated. And there have been watchdog reports from the Office of Inspector General and others, whistleblower suits about this sort of gaming of the system.
Trying to confirm, get the details on what has been reported initially in the Wall Street Journal about an investigation into the company. So just get us up to speed once again about what's going on and what we know. What's the latest?
Yeah, I mean, again, it seems like the Justice Department is investigating the company's Medicare billing tactics. This has to do with, basically how the company reports patient illnesses to Medicare for reimbursement, and whether those, basically what they're telling the government is accurate or improper. Again, stepping back, this has been an issue for the industry at large for a long time. There's other litigation involving UnitedHealth stretching back I believe, more than 10 years involving a whistleblower suit. That's being litigated right now. There's been audits, other settlements with other companies. So this is a known issue in the industry, but I think the news of a potential fresh investigation has, obviously affected the stock today.
Hey, John, before we let you go, taking a hard turn here and talking a little bit about the article in the South China Morning Post that says there are worries about a new coronavirus. I know this is just this is one single report, but high level, what do we know?
I think, again, looking at the South China Morning Post reporting, it sounds like a team in China has identified a new bat coronavirus that may have the risk for transmission to humans from animals. I think it's pretty early to understand what this means. But you see in the market shares of vaccine makers up on this. One more kind of, risk to think about, but still, I'd say very early and, lots of questions about this. But given what we know about what happened in the COVID-19 pandemic, obviously, potentially something that got the market's attention.
All right. Yeah. Absolutely. We are seeing shares of Moderna up as much as 6.5% today, right now, with a gain of about 4%. Pfizer shares have also moved higher on the news. All right, John, thank you so much. Bloomberg News healthcare reporter John Tozzi.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Something that, safe to say, Tim, some global investors might be keeping an eye on. They're also focusing on what we talk an awful lot about, what's going on in Europe and some of the weakness that we consistently see.
Yeah, we certainly heard that in the wake of Davos and sort of the tone of CEOs over there in Davos last month. So let's go there. Business activity in the euro area hardly grew again in February. It reinforced fears that the bloc remains mired in stagnation. As you know, European growth has been hobbled by a manufacturing malaise, political turmoil in its two biggest member states, and heightened uncertainty, Carol, from the war in Ukraine to persistent threats of U.S. trade tariffs.
Yeah, safe to say, Tim, our next guest knows a thing or two about the European economy. His company operates 13,500 cell phone towers in 6 countries in Central and Eastern Europe, including Slovakia, which is not too far away from Ukraine. He's also featured in Bloomberg CFO Briefing weekly newsletter, which comes out on Sundays. With us is Lars Mosdorf. He is Chief Financial Officer of Eurotelesites. It is based in Vienna, and he joins us from Germany, along with Bloomberg News senior editor Nina Trentmann, who is right here in our New York studio. Lars, it is so great to have you here with all of us. We do want to start with Germany. Our focus, we're doing a special over the weekend because of the election. It is the biggest economy in the Euro region. It has been struggling. It is curious for us, top of mind is how you are thinking about the outcome of the election and what it might mean in terms of jumpstarting the German economy and what it might actually also mean for your own business.
From Germany, first of all, thanks a lot for having me tonight. It's indeed, I would say, very rough times in the sense of that it's not predictable. Also from a sense that if you plan your business and if you really would like to frame what are the next steps to growth, because the framework in which we operate, in which the companies are operating, is quite unpredictable. And having said so, I think we had in Germany the upcoming election, of course, is one very important one. We had elections in Austria. We still are waiting for the outcome in that sense that we don't have a coalition yet in Austria, and there are other elections just very close or just behind in Europe. So it's a real change happening, and of course everybody is looking at the results. I think it's hard to predict what will be the real result. We see some changes day over day, but at the same time, if you ask me about the wish list for the outcome of such an election, I think it's important that we have a stable coalition at the end, a coalition that is really able also to act and to develop and to to clean up the things that we have been piling up in Europe in the last few years, and to really come back into the driver's seat. I think that's one of the things, and of course we see on the wings of the society some significant changes, and therefore the question is, will it be a coalition in which the new chancellor and also the party that will join the coalition is really able to change the fundamental structural requested changes that we need to initiate in Europe. And maybe the things we see in the US at the moment is a good initiative that helps Europe to really get back, as said, in the driver's seat on their own topics.
Lars, talk to us about your spending plans. Like, how are they impacted by this big uncertainty that we're not just seeing in Austria, but also in other European markets?
So maybe allow me a quick brief introduction of the company, because it's interesting. We're a bit behind the scenes, therefore that everybody, all of us, are using more and more mobile data. I'm only thinking about streaming. I'm thinking also about the things that are ongoing in using the mobile data, like cloud services, like online gaming, and so on and so on. And the TowerCo business in Europe, we're operating all over. There are approximately 450,000 towers located already. Those towers, they serve as the digital infrastructure. So this means that the mobile operators put their antennas on top of our real estate and our assets. And having said so, I think in our industry, the demand is significantly growing. We're, as a TowerCo, not linked to the data consumption, but to the overall increase of the demand. And having said so, we're planning to increase our spending on the CapEx side. So we already in 2024 reinvested 20% of the revenues into our infrastructure to keep up with the densification, but also to build new towers. And this will continue. Our guidance for 2025 is approximately in that framework, so still keeping on with 20% of CapEx spend linked to the overall revenue, and therewith I think we're very well positioned.
Hey, Lars, all companies right now dealing with stressed geopolitics. We see the U.S. role in this as President Trump carries out his agenda. I want to talk a little bit about Russia, Ukraine, because you worked in St. Petersburg earlier in your career. You were deputy CFO of Northern Capital Gateway. It operates the St. Petersburg airports. What can you tell us about your time there, your understanding of the country and of President Putin? Any insights you can share into just the conflict and seemingly how you're watching it?
I mean, I was there in 2015 until 2019 approximately, and it was the time in which there was still a belief that we could come closer together by working closer together and acting also economically closer together. And it was a time, and I can only speak for our airport project at that time, it was a significant infrastructure project that was appreciated by the Russian side, but also, of course, by the international investors that have been investing into the update and the upgrade of this quite modern, quite European standard-like airport in St. Petersburg. And therefore, at the time I was there, I felt a lot of opportunities to develop and jointly develop, and also feeling actually the sense that on the Russian side at that time there was an interest to attract international investments to Russia. I think through the war that was launched in the meantime by Russia, it has significantly changed, of course.
Maybe to follow up on that, you operate in countries that are close to Ukraine. I'm wondering, like, in how far are you seeing any impacts from the war on those countries, and like, do you see a potential solution to the conflict on the horizon?
We're operating indeed in Austria. This is the main market we are serving, but at the same time, we are also operating in 5 CEE countries: Bulgaria, Slovenia, Serbia, Macedonia, and Croatia. And I think the countries are not directly impacted by the war, thank God, but at the same time, of course, we as an infrastructure provider, we're the third listed tower co in Europe, and for sure, talking also about investments I just mentioned, we are impacted by, for example, high inflation rates. We're renting the land on which our towers are located, and therefore all the costs and the costs that overall are driven by inflation, by increase of the cost base, is hurting us. Same on the steel price, for example, that has gone down a little bit in the last few months, but still, if you look at such a tower infrastructure, the majority is, of course, the concrete and then also the steel. And having said so, we're lucky to see that we can work together with local suppliers. So in the supply chain, we don't have had any issues, and we would not directly actually expect any issues also from potential tariff discussions that we see worldwide. But at the same time, we have to cope with increasing costs. And if you look at the overall business model of a tower co, you can, on the positive side, see that we are, I think, a very long lasting investment opportunity, in that sense that we have long-lasting contracts that give us a high visibility for the revenues, but also for the free cash flow. We have been stock listed in 2023, and from day one we have been generating positive free cash flow. But at the same time, we have generated last year in 2024 an EBITDA margin of 85%, which sounds very high, but you have to think that, of course, we had to invest massively into this infrastructure. We bought those almost 14,000 towers with 1 billion, and this 1 billion has been transferred to debt. So this is, of course, something where we need to be very careful that we deleverage over time, and this is our primary target also in the next few years. We've been lucky that we have been deleveraging a bit quicker than expected, down to 6.2 times. And at the same time, of course, the interest rates themselves are quite high, and we always try to optimize the financing on our side.
Makes complete sense. Lars, so great to get some insight into your business in particular, some thoughts on the German election, and of course, what's going on or what was maybe going on in Russia, and just some perspective about what the environment used to be. Thank you so much. Lars Mosdorf, he's Chief Financial Officer of Eurotelesites there in Stuttgart, Germany, where it's a little bit later on this Friday. And of course, our thanks to Bloomberg News Senior Editor Nina Trentmann, a great view in terms of globally.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We want to go right to our next guest.
Mark Gurman is Bloomberg News Chief Technology Correspondent. He's our go-to on all things Apple,
Not
usually
a guest, family.
On the West Coast. We are so happy to have him here in the studio. Hey, I wanted to start with President Trump saying just a few hours ago that part of his conversation with Tim Cook yesterday included the fact that Apple will build plants here in the U.S. and not in Mexico. Just take us through the factories and what's in Mexico, what's in the U.S., because let's be honest, Apple makes most of its stuff outside of the U.S.
Tim, Carol, this is an easy one, and I say this with all due respect to the president. I think he made it up. I don't think there was any discussion of Tim Cook telling Trump that they have facilities in Mexico or planned any facilities in Mexico. As far as my reporting is concerned, Apple doesn't manufacture anything in Mexico, and Apple has no plans to manufacture anything in Mexico. What I think is more likely to have happened is that Tim Cook talked to Trump about its advanced manufacturing that it does in the United States, things like components, underlying parts in its devices. You have some manufacturing now occurring for some of the chips in the Apple Watch and the upcoming low-end iPad. You have manufacturing being done of some sensors, the Face ID sensor. Some of them are manufactured in the United States. You have Corning, right, in upstate New York that does some manufacturing. You have some manufacturing being done in Kentucky. But there has to be a distinction made between component manufacturing and final assembly manufacturing. The street investors, when we talk about this stuff, we don't really care where the parts are made. That's not important. It really never comes up. We care about final assembly. It's a process called FATP, final assembly, testing, and packaging, right? That's the internal Apple and operational nomenclature for this stuff. That's building the device, putting it together, testing it, make sure it works, put it in the box, and ship it out to the customer wherever they are in the world. That's what we think of manufacturing, mass production, mass assembly. It's not happening in Mexico, and I don't believe it's happening in the U.S. either.
Where is it happening?
Oh, well, most of it's happening in our favorite place, China, right? A lot of it is going to continue there. Still, 90% plus of iPhones are made there, but they're doing more. They're doing some iPhone in India, including the new 16e is done in India, but they've already started the 16 Pro and regular 16s in India. You're seeing some manufacturing of Macs in places like Malaysia. You're seeing some manufacturing of AirTags that's going to start at some point in Indonesia. You're seeing Thailand in the mix there. You're seeing Vietnam in the mix there for some AirPods and Apple Watches. So they're slowly expanding out of China. I don't think they're replacing China, but I think they're augmenting what's being done in China. And China, really, when it comes to the iPhone in production, it's still the center of the universe. So long story short, no Mexico, and more advanced manufacturing of components in the U.S., certainly. And I believe that is what President Trump and Tim Cook talked about. But I don't see any major final assembly here happening. They do have a Mac Pro that they do make in Texas, and they've made it in Texas for 15 years now, and I strongly believe they'll continue doing so.
So even if they wanted to start thinking about changing significantly their global supply chain, Mark, it's not something they could do overnight. So in other words, their exposure to China, it's going to be there for a long time.
Their exposure to China is going to be there for a very long time. It took 25 years to build up the situation they have now in China. It's going to take a decade if they wanted to move everything out of China elsewhere. I don't anticipate that happening. And right now, there's no reason for it to happen there. The big topic of discussion right now within Apple's operations group is diversification. Diversification does not mean abandonment. Diversification means you have some stuff in China, you have some stuff in Thailand, you have some stuff in the US, you have some stuff in Europe, wherever. You just don't have it all in one place. COVID obviously wiped out Apple production facilities, which were pretty much all in China at the time. Now you get wiped out in one country, you got some backup.
What about when it comes to tariffs in Apple? I'm sure, look, I don't know what happened yesterday. I don't know what they talked about. Apple was able to
Do we
have
know
exemptions.
what they talked about?
Well, you have to look at it.
Sorry, I'm curious. Like, do we have any insight?
Yes, but you have to look at it, and this is going to answer your question.
Yeah.
You have to understand, Tim Cook needs a tariff reprieve. He wants Apple products to not get additional tariffs, iPhones, Macs, iPads, watches, you name it. You don't just, the way it works, you have to dangle a carrot in order to get what you want, right? So Tim Cook wants no tariffs. Trump loves tariffs, he likes to say. It's his favorite word in the dictionary, apparently. And he wants tariffs, but the thing that Trump seems to want more than tariffs is to go back to his base and be able to show that he's bringing jobs back to America and he's bringing more manufacturing to America. And so Tim Cook is telling him they are bringing more jobs to America. They are bringing more manufacturing in America. We are investing more in America. Everything that Tim Cook is telling Trump is true, but he's doing it to get a tariff reprieve. And it's stuff they've been doing all along anyways, to a large extent.
But we're not going to get a press release out of Apple that says, hey, folks, we're actually not, closing down plants in Mexico and doing new ones in America, right? Are we not going to get a correction on that? Probably not.
No, absolutely not. I mean, they put out a supplier responsibility report every year. They just put out a recent one. I actually read through it a few weeks ago.
Yeah.
They don't have any final assembly in Mexico. They have 3 suppliers with facilities in Mexico, but those are individualized components. They don't make anything in Mexico.
I guess my point is,
you can take it to the bank.
My point is, they're not going to come out and necessarily, correct the president because they
they've never corrected the president.
They want a relationship.
Let me go.
Yeah.
Not only has Apple never corrected the president, they have what amounts to lying to some extent to help the president.
Let me just remind everybody what President Trump said earlier today. He said, Apple will build plants in the U.S., not Mexico. Apple's shifting plants because of tariffs. We're going to have lots of chip makers coming in.
I mean, that chipmaker point, that was my first theory, that he was referring to this new TSMC plant in Arizona where they're going to build some chips.
Which has been being built it's been under construction for years.
I mean, I can say that Apple's also not building plants in Greece. That is true.
So it's the long game he's playing. Tim Cook.
I think Tim Cook, I think Trump, they're all trying to get what they want. And guess what? There is a very real world in which they both get exactly what they want. And guess what? That's what happened last time in the first Trump administration. Tim Cook got everything he wanted, and so did Trump.
All right, just fair warning. I know you're here next week. We're going to want you back in the studio.
I'm
All
in.
right. Mark Gurman, of course, of Bloomberg News.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody. We've got just about 18, 19 minutes left in the trading session, getting ready to wrap up the Friday trade. And also, of course, this holiday shortened trading week, just 4 days, felt like 5, maybe felt like 6 or 7. But anyway, it's been a busy one. And we do see really a risk-off trade on this Friday. You just heard from Charlie and Bill Maloney. You've got most names in the S&P 500 lower, and we continue to just kind of bump along the bottom here. But not necessarily the kind of day that we've seen in a while. Again, 2% lower on the Nasdaq 100, down about 1.7% above the S&P 500 and the Nasdaq 100. UnitedHealth, though, really at play there in the Dow.
I want to know what Kathy Entwistle has to say about this. She's managing director at Morgan Stanley Private Wealth Management. She joins us once again from Ridgewood, New Jersey. Kathy, a sell-off such as this, I mean, there are folks who've been saying for months, they've been expecting some sort of correction. You look at the chatter and people are like, hey, this could be a buying opportunity. Others say it's going to go down more. How are you thinking about it?
Hey, thanks for having me, Tim and Carol. Yeah, I think it's really interesting what's going on. We're seeing the Mag 7, mega cap stocks, their dominance is starting to deteriorate, and it's time to think about, opportunities in other areas of the market as well. So anytime I see a market like this come apart, it is a great opportunity to reassess your portfolio, see what's working and not working, and maybe start transitioning into other areas of the market. Take some profits from where you have them and start going into other areas. Really is, to me, the best advice you can do. Lots of great opportunities here.
Kathy, is the market falling apart?
Is it falling apart? I mean, it's certainly coming undone a little bit. So we're not expecting like a complete meltdown, but we have been talking about the Mag 7 stocks for quite a while. And, the popularity of follow the money, everybody's running into the same stocks. And eventually it's just, it can't grow anymore. It's like an overcapitulation. And it's time for everyone to look at earnings and growth opportunities within those companies and see where the real value is. And if the value is too high, don't buy those stocks. Look for the stocks that are undervalued. There's some great names and great opportunities and great parts of the indices that are going down along with some of these overpriced companies. And so that's what you want to look for right now, to put your money where there are opportunities where they're undervalued, not overvalued.
What's undervalued to you at this point?
Undervalued? Oh, LOL, anything under, 30 times. No.
No, but I mean,
no.
No, I'm not just saying, okay, but I mean, specifically, where are you finding undervalued names? Like what sectors?
Yeah, well, I would say, first of all, if you go for, just sort of like the broader parts of the market, large cap value, it did underperform a little bit last year. It's probably a good opportunity to have some more of that in your portfolio. Growth has had, quite a run. We also do like, though, the mid-cap growth spot. So that's another area where you can find some opportunities. The sectors, financials, energy, healthcare, despite any news today, domestic manufacturers and consumer services are all sectors that we like.
What do you not like?
It's interesting. I think that we all had a lot of things, ideas in our heads coming into the market this year. U.S. is going to be dominant in AI. Well, we have some issues going on right there, right? So sort of a pause. Inflation is tamed, it's getting into a good spot. And then, maybe not quite yet. So it's more like just the tried and true areas of the market. And then don't be afraid to have, fixed income. It will be interesting to see what goes on with rates if we, have higher for longer. all of a sudden those high yield money market rates are looking pretty good again. But also to leg out a little bit into municipal bonds in your taxable accounts and high grade corporate bonds in your retirement accounts.
Hey, Kathy, what do you do and how do you kind of navigate your clients through the news that comes out of Washington, whether it's executive orders, executive actions, talks on tariffs? How do you navigate those conversations with your investor base?
Yeah, it's definitely been very distracting, I think, for investors and trying to navigate through like what is Washington saying and how is this going to impact, the companies that I own in my portfolio, but also their own personal lives. So in that respect, it's like take a breath, take a beat. Like we're not going to look at the short term, we're going to look at the long term. And over longer periods of times, the market always goes up. It's boring, but it's true. And if you have a long-term plan and you're investing for that long-term plan, you're going to be in great shape. You have to match your investments to your goals. So no short-term money. I'm buying a house next month. You don't put that money in the stock market, right? It's in liquid cash, ready to go. You're retiring in 20 years, go into equities. You'll be fine for the long term. You have to think broader when you're thinking about your investments.
It does seem like every time there's some sort of ever so slight decline, the dip buyers rush in. Indeed, that's how it's been throughout this rally. What breaks that mentality?
What breaks that mentality? That's a great question. I'm not sure what would break that mentality because it's also been like a tried and true way to leg into the market. Every time the market dips, throw a little bit more money in. So it's a concept of like dollar cost averaging into the market, but taking advantage of like the dresses on sale, right? I like the dress, now it's cheaper, let me buy it. So I think it's actually a good strategy. I wouldn't dissuade people from doing that. But what I would say is don't just go and follow the noise. Like think about what you're legging into and what you're buying into, that it is actually something that has the opportunity to go up over the next, 6, 12 months, 2, 3 years, and that you're in it for a long-term investment. Trading is very difficult to time.
You said it's a good question. Credit where credit is due. That question coming from a member of our audience listening and watching right now.
Nice. Excellent.
That's kind of you. Really nice to share.
You got to give credit.
Do you think the Fed should be concerned about inflation, or are you more concerned about weakness in the economy at this point?
I remember when we were starting to get inflation a few years ago, and the call was, "Oh, this is just temporary," and it's this too shall pass quickly. And then, of course, that was not the case. So what I would say is, when it comes to inflation, we've had like the issues that we've just had. I don't take it lightly that we're in this like sticky inflation sort of situation right now, and it does take a lot of thought and sort of timing of how to do this right. So it's no small feat. I do think that it's important to pay attention to it. And am I more worried about inflation or what was it, the growth of the economy?
Well, are you like more concerned about inflation kind of rearing its head again, or weakness, the economy starting to weaken more substantially, or weaken at all?
I think the inflation is actually going to be a little bit more of an issue than the economy weakening. I think it's the inflation is the trickier issue at this point still.
Right. So it's kind of like what the Fed says. You're in good company. We're going to leave it there. Hey, listen, thank you so much, Kathy. Have a good weekend. Kathy Entwistle, she's Managing Director at Morgan Stanley Private Wealth Management, joining us.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.